dive a little bit into the intricacies.
Right.
So there is fundamentals.
Right.
Obviously, there are a few factors which guide you.
Sure.
And there is this trend following,
Sure.
which is charts
Sure,
and
sure,
a few
sure.
strengths, weaknesses.
Sure.
What are those key elements that go into these portfolio construction tools?
Right. So as I said that, I gave you that line in Gujarati. If I convert it into English, it is simple: buy strength, sell weakness. So if I were to summarize my 32 years experience, my philosophy, it's just 5 words: buy strength, sell weakness. But what is buy strength? So buy strength, we realized over the years, again through trial and error, that ultimately what drives stock prices are fundamentals. Sometimes stock prices may move up without fundamentals, but it always ends badly.
Yeah.
And those are stocks we definitely don't want to be in. So the first thing is, we will never, ever, ever compromise on stocks that have good earnings. So not only do you need good historical earnings, you also need a good momentum in earnings. Once you get that, you've done your basic premise. Just to put it figuratively, like we have over 2,000 stocks in the NSE, but the number of stocks that actually qualify in our things would be hardly less than 200.
Right.
So what you've done is you eliminated 1,800 stocks which are not backed by earnings. And as I said, the beauty is that we don't create very large portfolios. We create a 20 stock portfolio. So even in that, I have to be able to show strength in price movements. So we've seen strength in earnings, we have to see strength in prices. And to study price strength, what we do is we do a lot of quantitative work. We look at 3 parameters, which is basically longevity of trend. It's not stocks that just go up for a week, 10 days and everyone's stocked. You should have stocks that are in a beautiful 45-degree angle in simplicity.
So not simple momentum.
No, not at all. Momentum has to be qualified with volatility.
Correct.
I definitely want momentum, but I will again not compromise on volatility. Very high volatile stocks are good to talk about, good to look at on television, but horrible to invest in. Because when stocks are very volatile, by human nature, I will land up buying at the top and selling at the bottom.
True.
So I need, as I said, I love 45-degree angles. I don't like 90-degree angles. So the fact is that that is what we look at in strength. That is strength in earnings,
right,
which drives strength in prices. And while selling, which is the more important part, the more difficult part, which I learned way back in 2000, that we only read half the textbook. The second half of the textbook is when to sell. And I think that is a more difficult thing because it also brings in a lot of emotional.
Yes.
Someone tells you to buy, people are very quick. The moment I tell you to sell, 2 things happen. Okay, if the stock is making money, so it's feeling good, you like the stock. If I sell it and what if the stock price goes up, you feel it's gone out of your pocket.
Yes.
The fear of missing out. The second is that very often, half the time, more than half the time, we will also exit at losses.
Yes.
Now, when we sell at a loss, we realize nobody likes to take a loss. You think that, what if I sell? And then the stock bounces back.
Correct.
So the emotion we identified is called fear of missing out, FOMO. So the fact is that the fear of missing out is what stops us from understanding that it is very important to be able to sell. Because every cycle, you will realize you get sucked in, and those leaders then ultimately you land up giving all the things. So ultimately it's about buying strength, Selling weakness is just the opposite in that you will find that earnings, the rate of earnings actually starts declining, and you will see prices making breakdowns. Now, how do you see prices make down? Of course, we use quantitative measures, etc. But in all simplicity, I tell people say where to exit. I'm talking about long-term investors. I said there are 2 principles. One is take 52-week low. It is as simple as that. It's a mathematical number. Some people say is 5% right, 10%, 20%. Nothing has a perfect answer. So I said for all its simplicity, take 52-week low. If you have a little more understanding, there's something called the Dow theory.
Yes.
Which is that when stocks are going up, they make higher bottoms, higher tops. And stocks that are coming down make lower bottoms, lower tops. So even if you imbibe that into your life, you are a star. You will never get caught. The challenge is that you should be able to overcome the FOMO factor.
Yes.
So this is really buying strength, selling weakness. As I said, buying strength, fundamental stocks, along with good volatility-linked momentum. And selling is just the opposite. The earnings starts deaccelerating and the prices start doing this.
Right.
And when you do this as a process, you will realize that in every cycle, you realize that you do get leadership in your portfolio. And if you keep doing it in a disciplined way, that is for us what trend following is. That's what I have learned from my mentors, and that's the only thing I do.